Hello friends, this is Rajat, Managing Partner at Finogent Advisory, and I hereby welcome you to the another IPO analysis for Roots Mobile. Like I said yesterday, it is like an IPO season and we are seeing one after another blockbuster IPO coming with a highly oversubscription. So after Happiest Mind Technologies, another digital technology IPO for the company Roots Mobile has come. Now the matter of fact is, guys, even on the very first day it was already oversubscribed, and now in the morning today it was already twice subscription. The final figures would be arriving with me in certain time, which I would be sharing with you. But while we go through it today, we will be doing a very detailed analysis of Roots Mobile and how it fits in your portfolio, and under current pandemic circumstances, does it stand a viable business model to be invested into, and should it be a part of your portfolio? While we do that, we have also covered one crucial element which earlier we normally don't do or haven't had done it. Neither you would be finding that in any of the IPO analysis present anywhere on YouTube. That is about the legal and other litigations against the company. So while we are analyzing it, we are also analyzing, are there any litigation against the promoters, or are there any litigation against the company or its subsidiaries, just to have an idea of it and how much liability the company has over its total net revenue towards those contingent or statutory liabilities or legal proceedings. So friends, stay tuned with me for the entire spectrum, and do like us on Facebook and YouTube if you find it quite valuable. So having now we're talking about the Roots Mobile, and when we're talking about the Roots Mobile, a very crucial element comes: what business model they are into. So from the mobile world, we know that okay, it is into mobile. It might be in mobile telephony or uh, cloud platform as a service or something like that. But what are the intricacies with regard to it? So friends, even if we go for an IPO specifics, so first and foremost, its IPO value is 10 rupees per share, is an equity share value. Now, if we compare it with the previous one, what we could call as Happiest Mind Technologies, its price range was around 165 and 166 rupees. But if we see Roots Mobile, its IPO price range is 345 to 350 rupees per share, and a lot is of 40 shares. In Happiest Mind Technologies, we had seen it was a 90 share, and it is a rupee 10 per equity share of the face value, while in Happiest Mind it was only 2 rupees. So what are the timelines? We already know that in the previous yesterday it has already been started. Today is the second day and tomorrow will be the last day. So on 11th September the bid offer will be closed. On 16th there will be the finalization of allotment. On 17th there will be the initiation of refunds, and then on 21st there will be the listing date. So on 21st it will be listed on the exchange, and prior to that you will get a refund of it. Now we know that any company when it raises the fund, there has to be certain objectives for it. So what are the basic objectives? There are three objectives with which they are actually being coming up with this IPO. First is, yes, like many other companies, they have certain borrowings on their books which they need to clear. So a part of it, that is around 365 million rupees, will go towards the clearing of those outstanding loans and liabilities, partly or fully, depending upon case to case basis. Then there will be an acquisitions or the strategic initiatives. This company had also, what is the business overview, what is the management overview, what is the industry overview, we will be taking care in the due course. In 2016 to 2017-18, they had also done many other acquisitions, and they had formed a very diverse portfolio of companies which provide end-to-end cloud solutions. And so therefore they have kept a very big chunk, that is around 830 million rupees, for strategic acquisitions. Then they have also reserved 650 million for purchase of their office premises. Now it might sound a bit of the grid key, why they are actually putting around 650 million in a office premise buy, why they are getting this fund consumed. That can't they just be put it into allocation for the increase of business? But the matter of fact is, there had been a comparative analysis that they had done that currently, based on the current COVID pandemic scenario, the real estate prices had come down. Due to that real estate prices crash being coming down, they found that it is more feasible on a longer tenure to have their own self-occupied premises, plus to have a bigger office space, so that the whole team sits at a one juncture, and financially it will be a viable solution. Had it been 2018 or 2019, then buying an office premises would not have hold water. But in current circumstances, we are seeing that a judicious move which might pay dividends over a period in time. So these are the three categories or the objectives in which they will be doing. Apart from that, there are general corporate expenses, which obviously a part of it will go into. So when we talk about this, we also talk about the industry overview. So they are actually into the cloud platform as a service format. So while they are into this format, so it is technically a cloud computing, because now, like in case of Happiest Mind Technologies, we had seen that companies are moving from the legacy IT space to the digital IT space, and many of the business and processes are now being managed on cloud computing. So this Roots Mobile is actually riding that wave. So they are into SMS, MMS, internet and social broadcasting, OTT, आपके जितने भी ये towers हैं, आपके network operators हैं, they work on the network operators and then they provide that avenue. So all, whatever the different or the big IT spaces are currently pursuing in the market, or whether you talk about banking and financial services, media and entertainment businesses, in all these, the back-end technology is actually moving on to the cloud computing, and this company is actually making the best of it. Then we come over the business overview. When we talk about the business overview, it has businesses into three different categories. One is your mobile operator, then you have around BPO services and enterprise solution. So if we go through it, they currently have around 30,150 clients, and they are very well geographically diversified. However, currently, even if they have very core group of clients, which obviously not that much, they have some key big clients which actually, if move out of the company, might prove to be a bit risky for the company. So therefore, while they have 30,150 clients, they have served over the tenure, they still have some key bigger clients which hold the majority of the chunk, which might impact their business if they lose those clients. In mobile operator services, they currently are into SMS analytics, firewall and filtering, monetization, how you monetize through the mobile operator network, cloud platform as a service, and hubbing solutions. When we come on the enterprise solution, which is at, if you see on the screen, it is on the last parameter, it is a cloud-based communication platform, RCS, A2B, but how different platforms communicate to each other, from peer to analog system, and from the system to back to the peer. Two-way messaging कैसे होती है, OTT पे कैसे होता है, that way it goes. Voice applications like IVR, they have even the company with the name of Click to Call. So Click to Call actually works over the voice application services and the IPR. So that services form a core of their cloud computing, which many big companies are actually subscribing to. Then there are they also have a Root Mobile API developer network. They have got a network of API developers, or the companies develop. So all those entities come together and develop APIs for it to be integrated. So mobile network operator के साथ what they have a very diverse engagements, API exchange होते हैं, and then they have provided that whole ecosystem over which different companies connect together. Then lastly, in the middle, there comes the BPO services, which is client support, technical support, booking and collection centers, so on and so forth. So now when we're talking about analyzing the company per se, we are now talking about analyzing its strength. So when we talk about analyzing its strength, they have the omni-channel communication. So over the omni-channel communication, they communicate, whether that is a cloud-based mobile telephony, or that is a desktop, or there is another electronic digital device they want to communicate, they provide that. Mobile network operator focused suite of services. So they actually have focus on the mobile, and they ensure that for mobile network operator, whatever the end-to-end solutions have to be provided, they are in the game, and they are very less dependent on other network operators for this. Yes, between different legacy systems and otherwise, they might need certain APIs and they might depend on other network operators, but precisely on the broader mobile network operator, they want to cover end-to-end solutions. There's a global connectivity through established relationships with different other mobile network operators, diversified and global client base, like they are very much present in South Africa, and they have many 18 different geographical locations they are present. So they are not limited to any one geographical issue. So tomorrow, if there are certain political issues due to which certain licenses or approvals do not come in, they are well geographically diversified to take care of the political risk that actually comes with the company. Then there's a robust business model and consistent financial track record. They have sustainably built up their book. Their earnings per share have increased from 9.64 to around over 13 rupees per share. The revenue growth has also been consistent over the past years. Experienced promoters and senior management team has already been there, and they are leading the company. And scalable delivery platform supported by robust infrastructure. So they, like I said, that they are into end-to-end solutions. So therefore, they are having a very good robust platform. So while we're talking about it, here is what comes the very crucial element of the analysis. Many times we see what is the rosy picture, but we don't read between the lines. From the 436 page of the RHP, we have gone in detail and we have analyzed the different legal and litigation clauses that they have disclosed. While like all companies are actually embroiled one on other legal issues or litigations, this company fortunately is not that much involved in any of these litigations. There are minor issues that have been there over the past since 2008 to and 2012 period. Some related to the enforcement directorate, some related to the transaction in Supreme Techsmart Limited, so on and so forth. But many of these cases have been put on stay. And if we see about the total liabilities and litigations, if we are not wrong, it is around 2% of the total revenue that is there. In many of the cases, in subsidiaries and otherwise, there is very less litigation on them. Rather, they have placed litigation on many other entities who have actually infringed upon their rights and their revenue sources. So if we see from this excerpt on the left hand side of the screen, if you see, this is taken from their red herring prospectus, and if we see, there is around 2% of the exposure to the revenue as far as these litigations come, and they have been very well disclosed in the red herring prospectus. Our viewpoint is that it doesn't hold that much of a tangible risk to the company or its future as of now. While they have disclosed, as per their disclosure norms, they have disclosed their outstanding liabilities, but that won't impact to the bottom line to such an extent to impact its actually creditworthiness. So nothing that much to worry about the litigation or the legal aspect of it. Now here comes the financial snapshot. If we see from March 2018, 19 and 20, if we see that their revenue in 2018 was around 841 million, which actually went up to around 9,681. So there was a phenomenal increase, around more than 10 times the increase in the revenue. But if we compare that with the expense had equally been increased by around 10 times. However, the profit before tax had also increased by over 10 times. So that means between the 3 years, they have increased 10 times. And their even earning per share has been on the green. From the financial aspects, if we see that there is nothing much to worry about. When we have gone through their internal financial statements, we have come to know that not much of any observations with regard to any extra expenses or unaccounted, or you can say that out of the normal business operations se jo revenue aata hai, it was not that okay, in this year they got around 500 from the sale of certain properties and therefore their ROI or return on investments or the net profit was up. So there was no deviation from their previous years. It was much due to their ongoing operations that their income had increased. So financially they are actually sound in terms of their operations. And so wrapping up it in around 15 minutes, next 45 seconds to go, I would like to say that while we would always recommend you to please consult your financial advisor before taking a call, but here in this case we would like you to pay a second thought to this. And this is one of the company which is actually into a platform as service sector, or it is into the technology sector, which is actually capitalizing on the COVID scenario. So which is actually capitalizing on the COVID scenario. So while it is capitalizing on the COVID scenario, you need to be on the bandwagon for it. That is a matter of fact. That is a matter of fact. And This will ensure, that once you have this such a company in your kitty, it will ensure that whenever you have any emergency or any emergency situation, you will have this company in your kitty. So this is what I would like to tell you. Make sure you stay invested, build kitty, roam mobile, and hello friends, sorry for the disconnect that had happened because of the network issue. So I would like to tell here that this is one of the platform that needs to be there in your portfolio. And while you are having an envisioning of it, you need to first consider a financial advice of your financial advisor, broker, or a dealer, and see whether this product, this stock actually fits in your broader span of financial planning or not. That is the first aspect. Second aspect is that don't look at it from making a kill. We know that there are 10 different companies over the last 1 year that have been listed, and they have been up by 50%, 60%, 70%. I would request you not to look at this from making a kill. Okay, I will get an IPO tomorrow, and in 10 days I will come out of it at 50% return or 60% return, because anyways it is oversubscribed. You won't be getting more than one lot, and it doesn't make any sense to go into 2 lakh of the investing. So while you're going it, couple of pointers or checklists that you need to have. First thing, first see whether it fits in your risk appetite portfolio. Secondly, keep this stock for next 3 or 4 years of the duration. Thirdly, while you're going it, only bid for one lot at the higher price band, because it is already oversubscribed. So you will go for 350 rupees or a cutoff price, and you will while you go for a cutoff price, invest for around one lot only. That's it. And there is still 1 day to go for it, and you can have it in the kitty, but make sure it is in sync with your financial goals and your horizon. So this is what I would like to tell you. Happy investing. And for affluent HNI investors, again, 15,000 bucks getting in allotment will not hold water, but yes, it is a good way to get your kids into investing and have them have the investments be routed through their bank accounts, because for every IPO that comes, even if 20,000 or a 40,000 of the bucks being allotted would make a great difference, and for next 10 to 25 years you would be holding that stock in your portfolio. So while I say that, make sure you stay invested, build kitty. Rome was not built in a day, neither the portfolio would be. Thank you so much, friends, and stay tuned. We'll be coming up more detailed analysis and another business strategies over this week. And while I sign off, I would request you to stay tuned with us on Saturday at 6 p.m. when our rescheduled cover page launch will be telecasted live, where Dr. Som Datta would be there, who would be with us on a live interactive session. Thank you so much. And I would like to thank Mr. Parnay Ban, who had given us a very good feedback about the presentation. And today the presentation that we had made was after receiving a feedback from Mr. Parnay Ban through a personalized call. So I would request all of you, if you observe something, you want me to add some value to it or add certain more attribute to it, please do let me know. You can post it into the comments, or you can call me on my own number 9560489579, and please do let me know. I would be very happy and delighted to improvise on it, provide good value content to you, so that you are able to build wealth for yourself. Thank you so much, friends, and thanks Parnay Ban once again for your much needed feedback. Thank you, friends. Good night. Stay safe.